Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a sell-off on pretty high volume across the board in the equity markets and got some pretty decent long liquidation down into the 46.5 to 48.5 support. At this point, the markets are running on very high volume and sellers are in firm control below 52 to 53.5. And right now the bias is bearish and we're looking for a range extension below the overnight low. So that's the primary scenario on the day time frame. So any pops back up into resistance are going to present some nice shorting opportunities on first test. So 52 to 53.5 is a good spot to get involved. And beyond that, we have resistance at 55 to 57, even the 58 level. And below 52 to 53.5, sellers can be in firm control, but even a bounce into 55 to 57 or a little bit higher would not invalidate or reverse our bias on the day time frame. So sellers can still be active even up at 55, and then we can fail and head lower and retest the 46.5 to 48.5 and then head lower and test some of the lower support zones. So the way this thing is shaping up right now, it doesn't look like this is going to be the end of the downside right now. It seems like we are going to extend below the overnight low and test some of these lower support zones, with 39 to 40 being the short-term range extreme and a downside objective on the day time frame. So 39 to 40 is the downside objective on the day time frame, but bigger picture, the selling does not have to stop at 39 to 40. We could quite easily be heading down towards 36 quarter to 37 quarter, and then eventually even the 29 quarter to 31 quarter area could be in play. It doesn't have to happen today, right? It can take some time. It can happen later in the week or even possibly next week. But if we continue to hold below 52 to 53 and then start liquidating below the overnight low, then bigger picture, that 29 quarter to 31 quarter zone would be a potential downside target just on the larger time frames. So at this point, the focus is going to be on short setups, and in a market like this where it's running on high volume, you basically to get involved you have to be willing to take 1, 2, 3 stabs on the short side, right? So for example, if it pops up to 52 to 53.5, that's a short setup. If it goes beyond that to 55 to 57, that's another short setup, right? And the only time that we would back off from shorting this market is if there were just some very massive high momentum reversal taking place, right? Where the day started and the internal started just kind of on a bad note but started rising in a pretty fast way, and momentum shifted and it was to the upside. But that's not the expectation. So in the high odds scenario right now is to short the market, look for a range extension lower, be cautious on the long side, right? It doesn't mean that we can't get rotations off of these support zones, but below 52 to 53.5, if we just continue liquidating, then this market doesn't really have to stop until we really kind of push a range extreme down towards 36 quarter, 37 quarter. And for that reason, if the market starts just kind of putting in kind of a panic type sell-off, then you don't really want to step in front of that, right? You have to be willing to let go of the long setups in that case and just skip. Even if it looks good, just skip it. Or if you do take it, then just be aware that sellers are in pretty clear control here, and just manage your risk accordingly, right? So if you're taking a long setup, perhaps take a quicker scale out, right, to manage your risk and reduce your position on that. And that way, even if you're taking some of those long setups at support, and let's say they don't work, then you're not really taking full losses, and that quicker scale out at 2.5, 3 points allows you to just reduce your risk, and that way even if it hits your stop, it's a break-even trade. So right now, heading into the open, again, the main focus is going to be on the short side, even if we get a pop, right? I mean, we've sold off a pretty decent amount in the overnight session, so we could pop up to 55 or 53, 54 before we start balancing and heading lower. So that would be okay. It wouldn't be out of the ordinary, but that doesn't mean that we're going to start looking for long setups, right? So as long as we hold below 55 to 58 area, sell side is still okay. Above that 61 to 63, we're going to be using as the bull bear zone. Again, given the type of momentum and the type of sell-off we've seen in the overnight session, these types of days usually don't even put in a retracement. They don't really bounce much. They just kind of go. So I'm not really even focused on the 61 to 63. I mean, if it happens and we somehow get a reversal, then that would be the low odds scenario, and you have to be prepared for that and manage your risk. But the high odds scenario right now is a continuation lower, so that's the one we're going to focus on. Overnight, we've seen some pretty decent long liquidation. So at this point, any pops up into these resistance zones, we'll sell those first test, gauge the reaction, and then if the market is not putting in that continuation move, or if it's holding up really well, then we'll reassess it. But until the market gives you some clear signals that it's turning back around to the upside, I think it's best to keep your focus on shorts, avoid the long side, and just see where the the day kind of goes later in the afternoon. We could be trading 39 to 40 before lunchtime if this day really pans out the way that I think, and if the sell-off really just kind of continues, because we are going to have at this point a lot of stuck longs in this market, and if they start liquidating, then it could be a pretty decent move lower. So even though we're already down almost 20 points or so from yesterday's high, and it's difficult to short the market when it's already that low. At the very minimum, you don't want to buy the market, and usually a difficult trade is the one that pays off, right? So keep that in mind too. So those are the main ideas today. Russell is looking quite weak. It's put in a really decent downside push, and in that market, expecting it to hold below the 1150 to 1152 zone. As far as NQ goes, we have resistance around the 38.56 half to 38.59 half, and ideally, NQ stays below that. So those are the main thoughts. Let's see how well the sellers maintain control off the open, and we'll take it from there.